All right, everybody, welcome to CyberBulls. Hard to tell whether or not things are looking good or things are not looking good. We're going to talk about the economy and what the Fed just did, but there's so many things coming that's looking great for Tesla upcoming. And then we're going to do a scorecard. We're going to ask the bulls here, where do they think some things Tesla's doing really well and where they are not doing so well? We've got the bulls with us. We're just missing Alexandra today. We've got Xander Sky, Christian Valente, and Jeff Lutz. Welcome, everybody.
What's up, guys?
Great to be with you, Herbert. Hey guys.
So we got an agenda that we like to do, but we don't have to follow this at all. But one of the things I want to ask you guys is, where do you think Tesla's winning and where they are not winning? We do have to talk about the key milestones that Tesla hit this week. And then we cannot talk about the Union and Cybertruck and Q3. And then fun topic, there's some of us who actually think that there's some partnerships that are possibly brewing. So why don't we get started there? Let's go with you, Xander. Tell us, where do you think that Tesla's doing well and where they're not doing so well?
You mean the company or the stock?
I'm talking the company. Let's talk company first.
Company's doing great. The company does everything right. They're perfect. Elon's perfect. Everything is great.
Okay.
I think it's amazing that they're improving the car every day. They are adjusting, the supply chain stuff. Like everything that they do is right on. I know sometimes it doesn't feel like that, especially in a day like today, but they're good.
Okay, Jeff, what do you think?
Yeah, no, I think they ripped the Band-Aid off for the quarter. I think they've let the street know that the quarter is going to be light from both a production perspective and a delivery perspective. But I do think they're executing in this climate. I think they're, in terms of, you have to think about value per dollar and the ability to grow the EV segment globally. They are growing the EV segment. Probably them and the Chinese single-handedly are growing and driving EV adoption globally. So I think that's what they're doing right. I think the economics are going to settle in. They still have great economics. They're still throwing off positive free cash flow, and they're investing like you wouldn't believe. That's actually why I'm more excited. When you're an investor in a company versus, just trading in the name or just sitting on the sidelines, there's a difference, right? And if you see the company going in and investing in the future and doing it in a smart way, in a smart capital efficient way, I haven't seen a company that's been more efficient with R&D dollars than Tesla. And you can look at the metrics in terms of R&D as a percent of sales. So I actually think they're doing the fundamentals right. I don't think this is going to be like a perfectly smooth thing of like, this is when factories come down, this is when they get upgraded, the demand is just going to be, buttery smooth all the time. No, things are going to be lumpy. I think, let's be critical, right? The 4680 ramp looks like it could be or continue to be a challenge, right? And that could have, we're all speculating, right? But that could have put us, could have driven that, the 4680 version of the Model Y to be, taken offline from a configurator perspective. So there's areas where I think the company is going to be challenged. I think the Cybertruck ramp, we'll talk about that later on. I think that's going to be challenged. I think getting the Model 3 globally launched, I think that's going to be a challenge. But, if the company is expanding the portfolio and, they're going to be able to drive, higher demand based off of this. And I think their economics are continuing to improve. I think the areas to watch out for are the 4680. And I think it's also driving the Austin economics a lot as well. So that's another area to keep an eye out for.
Question.
No, I agree with Jeff, what Jeff's saying there. For me, I mean, like if we were just talking about the company and remove it from the stock, like Tesla, the company, it's a great company. How could it not be a great company? It's got a great leader, right? Even though he's, sometimes could be a little erratic, and I'm listening to the book, and he's a genius, and he's got the best engineers recruited, right? 1 and 2 every year, SpaceX and Tesla. We know all this, so we know we have the best people working on the most cutting edge technology, technological advancements, right? So you're in a great company. Now, that being said, we're people, and we could say, yes, there's a little bit of communication issues. I think that's one thing. If I had to talk about Tesla, for me, it's just
Yes.
communication. Just me personally, the way they explain things on a conference call, that would just be an example. When is something going to happen, and maybe that timetable slipped. So for me, it's just more communication with investors and Wall Street and institutions. I think there's some improvement that can be made there, and I don't think it would be that difficult. So overall, I'm very pleased with the company. It's an amazing company. It's an amazing future with a lot of things to play out over the next 5 to 10 years. So you have to be patient with it. But yeah, if I had to make one thing, it's the communication aspect.
I love it, Christian. Yeah. So earlier before this show, Christian and I were talking to each other, and I think we came to a kind of a little bit of a realization of why sometimes we we battle each other. When something is being discussed, he looks at it from a stock first perspective. I always look at it from a business first perspective. And so sometimes when he's saying the company's not doing something right, he's referring to the stock or the impact of the stock. But he actually agrees and believes that the business is doing really well. So I appreciate that, Christian. So, in my mind, I look at the business, we're looking at the business, and we're giving them a scorecard of the companies doing well or not and where they're failing. I try to compare that to other companies. Are they doing worse than another company? Would the other company have done better? And so the way Jeff had kind of outlined it was correct. I think at the end of the day, they're hitting like crazy goals, crazy objectives, and vast majority of these things are going really, really well, although maybe delayed from our timelines or maybe the stated timelines. And that's why we are disappointed. But at the end of the day, you step back and think, oh my God, right? The bot is actually now walking and it's moving along quite nicely. The gigafactories have scaled. They've struck partnerships with basically made the North American charging the standard that's out there. I mean, I can just go on and on and on. And then there's things like the 4680. It hasn't ramped up as fast as we want. There's the Gigafactory in Mexico that's been slowed and delayed. And we can go on with a lot of these other things that are negative. But it's like at the end of the day, would have another company not, if they were in charge, would they have achieved these things faster? And I don't think so. So for me, it's like, yeah, I am very, very happy with where we're headed as a business. Take that away from the stock. And I like it, Christian. I agree with you. Communication is their weakest point. Absolutely, that is the weakest point. There's lots of negatives. I don't want to say that I don't look at this company and wish that they had done a lot of things better, but there's just so many positives. And so at the end of the day, the business is fine. Now let's talk stock then. So where do you think, you guys, where do you think that what have they made the mistake for, should I ask this question to a lot of people that I talk to is like, is the board responsible for the stock movement in the short term? And I think the answer is no. The answer is not for 6 months, not for a year. And they're responsible for stock appreciation over years, not necessarily in the next 3 to 6 months.
I agree with you. Just let me jump in since we had that little conversation. So I look at the business too. Sometimes I think there is a miscommunication when we talk, when we're like, you're thinking I'm talking business stock. But yeah, I look at the business also as an investor, and you make a great point. But what I'll say is, you're right. I just want to bring this up. Like when we talk about Tesla, they are doing things that have never done before, right? The efficiencies they're trying to go for. The Cybertruck is a new, thing. The 4680 was a new architecture battery design. You know, it's very ambitious what they're doing. So you're right. He's going to make some deadlines and he's going to miss some, right? Because they're pushing it so hard. And I love that. And that's why we love investing, right? Because they're pushing so hard and Elon's going so fast and he's trying to get his engineers to, give him a date. But, if I don't give him a date 2 years, it's going to take 5 years. So I need to do 2 years and maybe we get it done in
Right.
4 years. So that type of thinking, right? That doesn't always match with Wall Street. So I think you make some great points. And what I'll say is the stock is the stock, right? Of course, I agree with you. I don't think that the management should manage the stock day to day to day to day. But I will say this. I do believe it's in the board's purview to acknowledge that they are a publicly traded company and try to say, okay, we have shareholders, and I think we have some responsibility, not in the stock price, but to give a good effort to relaying certain things about the company that can maybe support a stock price. So if actions are being taken that maybe could directly hurt the stock price, but the action could be mitigated a little bit to maybe soften the blow by just going out of your way and just stating something a different way or something, or explaining it a little better. I think that is within the board's purview. But I agree with you, they shouldn't be worried about the stock day to day, but I think they should have a understanding that they are a publicly traded company and that the shareholders like us own a piece of the company. And to be honest, we probably own more stock than Elon and the board does in total. So we are a big representative of the table. And Elon is he loves his shareholders. Don't get me wrong. He's talked about he loves his shareholders from the beginning. They gave him a shot to the public markets gave him a shot without liquidity, things of that nature. So I know he loves the shareholders, and long term he's going to do right by the shareholders. But sometimes in the short to medium term, it could be painful, as we can say.
Thanks, Christian. Very nice.
Let's comment on the stock a little bit too technically. It closed almost on the nose of the 50-day, I think, today. So I found that interesting. It's like it's a lot of tech got hammered today, and Tesla held up pretty well actually, and it closed on the 50-day. It's well above the 100 and the 200-day. So I think technically it's actually still in pretty good shape. Again, seasonally, this part of September is challenged. I do think it's a stock picker's market, but I think technically it's still in pretty good shape right now. So it's really getting, we're counting down to the last, 8 to 10 days of the quarter. And, this is crunch time, I think, tactically for the company. But I also think it's going to be, if we're talking about the stock itself, I think it's going to be a story of like Q3 was kind of this transition quarter of like we're working on we're bringing new models out, clearly disruptive in China, clearly disruptive with production and deliveries in Europe. And I think if they tell the story the right way of like this is what we're doing. By the way, I think that Deutsche Bank note that we went through earlier this week, Herbert, I think a lot of people missed that. But the inventory, there's not enough inventory to cover the length of the shutdown. Again, globally, this is not a necessarily a linear story for every single site in every single region. But globally, if half of their 15 or 16 days is in transit, they're under inventory, and they don't have enough available to sell, in my opinion. So anyway, I think technically the stock's in good shape. I think there could be obviously some reaction to Q3. There's a lot of options trading on this stock, and there's a lot of people betting one way or another short term. But I do think they have a really good story, even for Q4. If you're thinking tactically, I think 3 to 6 months, Q4, Q1 is still thinking very short term. I still think they have a great story with the new models coming out and the Model Y growing in strength.
Yeah, that's the difference, isn't it? For the last 6 months, last year, we always kept saying, just wait till next quarter. Just wait till next quarter. But this time, we're actually got 2 new vehicles coming out, increase in TAM and market. So before we move there, Xander, what's your thoughts on the stock? I know you follow it closely, so I'm curious what you're thinking.
Yeah, Jeff nailed it with the technicals, and historically, September is the weakest month, and kind of finds the low point, and you have the holiday selling that happens before Rosh Hashanah, and so that's why we're dipping, possibly. So, but typically by Yom Kippur, which is I think this upcoming weekend, there should be buying happening. But yesterday's Fed announcement that higher for longer really, you saw what they did today. It was all over the place. The yields are up, and it's impacting all stocks, not just Tesla. So the good part for Teslas is that like 250 areas where I expected to go this week, and we got there. Possibly tomorrow we'll go test a little lower, but I'm going to be, I saved some cash for this. So I'm going to be buying a little bit tomorrow. And I think that, with new vehicles coming out, and the earnings potentially, that we bottomed, that we actually, start going up, hopefully. But like I said the last couple of times, I'm kind of happy that we're staying in this area and I can deploy some cash because historically November and December should be in these types of years, pre-election years, we get a nice Santa rally. So I'm trying to position myself for that on the money that I trade, not the long-term fund.
Yeah. But to bring up your point, Xander, go ahead. Go ahead.
No, go ahead. Yeah.
I was going to say, it wasn't just higher for longer. They spoke about possible another rate hike, maybe two. I hear people talking about 2 rate hikes. So again, we're just having a chat, and they reduced. Now again, this might all change, but this is market psychology, and they reduced next year's rate cuts. They're not looking for a rate cut till maybe now September of next year. Well, that's a long time for a lot of disasters to occur. Like things are expensive. Like like liquidity issue. Like I don't know. Like I keep saying on X, there's a lot of you can go crazy looking at stuff, but there's a lot of people going to all cash. I'm not saying that's a good move or not, but I think there's a lot of people after JPAL again. If you remember on X, everybody was talking about, and even talking about rate cuts. There's no rate cuts coming. There's none coming. If anything, there's another rate hike. If there's a rate cut this year, it's because a disaster occurred. And if a disaster occurred, most likely the market's going down, not going higher. So if you're a bull in this market, you don't want a rate cut. You want the economy, the inflation to keep coming down, and the GDP and the economy to keep humming along. If you see a rate cut this year, that means something occurred to cause the Fed to do that, and that would be bad news. And as far as the rates, we talked about this before. I know you guys are more you're building and you're long term, and I get it. And so am I in certain aspects. But when you can get a 5.5% risk free rate, if you have any significant amount of money, you can generate good cash as monthly income. So if you're an older person and you'd say, I don't want to do this market stuff right now, the Fed's got me scared. But hey, I could go get 5.5% with no risk and every month just keep piling that on. That's not a bad return, right? Like the S&P historically will give you what, 8%? Of course, some years it's really good, and some years it's really bad. But if I can get historically 8% a year in the S&P, and I can get 5.5%, or maybe push it a little bit and get 6 with no risk, that's a good trade-off. So I think we just have to watch here about the Fed. I think they're making a mistake. I tweeted this out or X'd it out yesterday or posted it, saying that the Fed has done a good job up into here, but they always screw it up. And my worry is that they just stay too long trying to get to this 2% magic inflation target, and they snatch victory and turn it into defeat by continually talking hawkish, by actually acting hawkish. We keep saying, and Jeff made good points, but we keep saying the Fed's going to talk it so they don't have to. Well, I believe them. I've been believing them now. He said it again yesterday, very dramatically. We're getting down to 2% no matter what. No matter what. Now, that may change if there's a complete disaster, but no matter what means to me, they are committed to getting inflation down. And if the stock market has to go down 20% or 30%, so be it. If unemployment has to rise 2%, 3%, so be it. He is adamant on getting inflation down. So I think markets are in a wait and see mode here, but great conversation so far.
Christian, so Powell, is it wrong? I think this is the first time that he's started talking about not overdoing it, right? Or has he talked? Because I think there was an answer to a question, so is it right? Like they haven't done anything. All they did was continue to pause, and they are, they're saying that they're going to, stay higher for longer. The dot plot and that's just they don't want us to get bullish, right? They don't want us to start spending money. So if they're trying to control inflation, keep going, please.
I think the reason, look, the dot plot doesn't mean anything. I agree, but it does mean what they're thinking. They're not going to put out a dot plot to say, oh, let's put out this crazy dot plot so we get inflation down. I think in their head they think that is what that's what they're deciding, right? It's not like a game to them. So it just puts in the market's mind. It doesn't mean they're right. It just gets the market thinking, here's what the Fed is thinking. And the market has been off sides on the Fed all year, and they're maybe finally they're getting it, saying they are not cutting. Because I heard all year the market participants, people on X, they're going to cut this year. They're going to cut. They're not cutting. If anything, they might do another hike. And if anything, the first cut might not be till after summer, late summer of next year. Again, that may not all happen, but if the market believes that's what the Fed thinks is going to happen, then they're going to act now. Again, long term, it's not going to matter, but there might be some short term pain as we watch it unfold. Yeah.
Okay.
That's all.
Fed time.
Go ahead,
Fed
Jeff.
rant time.
Yeah. And then
Christian
we'll move
brought
it
up a
because
lot
Pepper
of good.
don't like to be here too long.
Well, Christian brought up a lot of
Go
good
ahead.
points, and you should. Can you guys hear me?
Yes.
Yeah.
Yeah, we got you.
Go ahead.
Okay. Yeah, Christian brought up a lot of good points. You should follow him. He's got a lot of great insight on kind of the psychology behind markets and how people think. But let's again get down to facts. There's things that the Federal Reserve say, and there's things that they're capable of actually knowing. So they have this gigantic organization, but if you again look at the facts, and if you rewind back to November 2021, they didn't have any rate hikes for 2022. They may have had one, and all of a sudden we did 7 in that year. So their ability to forecast, we started in March, by the way, of that year. It's not like they had the forecast out 6 or 9 months. It was a couple months later we're doing rate increases, going from a quarter point to a half point to 375s in a row. I mean, it was ridiculous. So their ability to forecast should be called into question, and it should be called into question on both sides of this. And I think Christian's right. They could go, they could do this for too much, overextend, and cause a bunch of other problems. So I agree. I don't think we want a rate cut, but I think inflation is naturally coming down. The problem is we depend on the Fed to do all this stuff, and there should be a lot of other market forces to take inflation down. Like there should be people working on the root causes of inflation. This can be a whole other show, but I'll put that to the side. The things Fed can't. They really don't have a good handle. Like raising interest rates isn't necessarily going to impact the price of gasoline at the pump or oil. Yes, they can take down net demand, but in general, a lot of that is a supply demand aspect, and that's one of the biggest things driving the recent upticks in the CPI. But if you look at if you actually take high frequency home data, real home data, like what people actually pay for rents, looking in Zillow or looking into Redfin, and you actually plug it into the CPI is below 2%. So I do believe that there's people actually looking at this, and I think some of this data, some of the high frequency data is actually leading to them to not raise again because there's long and lagging impacts of them putting a rate hike in. So where does it go from here? I do think, we're going to be at these higher rates at the end of the year. I think they're done in terms of rate hikes. You flip a coin. I don't think a quarter point in November or December is going to destroy the markets. It's more about what they say. But that's why I put that disclaimer on. And they could say whatever they want. They could say they're cutting in June, they're cutting in September. I'm telling you, the data says they can't forecast out 3 months regarding what they're going to do. So I think there's other market dynamics to look at. By the way, I think the 10-year and the 5-year was doing a lot of the work for the Fed. The 10-year and the 2-year were doing a lot of the work for the Fed today on their own. So, you know what, all these things are variables that need to be looked at. And finally, I wouldn't be buying large indexes or large baskets of various funds. I would be looking at specific stocks. And again, this isn't financial advice, but I think it's more of a stock picker's market than let's go to the Qs, let's go here, let's go there. I think if you're gonna beat the market, it's a stock picker's market.
I agree with that. That was a great point, Jeff.
Yeah. So yes, it can. They cannot. It's very possible that they're going to pause for a lot longer than we want, right? I still believe that they're just jawboning. They're just saying things, and they're going to pause again. But like Jeff was saying, even if they raise by a quarter point, it's already built in as far as I'm concerned. Then when I look at Tesla, I'm looking at it going, well, they're still guiding for 1.8 million cars sold for the end of this year, despite the interest rates already been this high for a year. And so that's okay. This is a really tough macro environment, and yet Tesla's still doing maybe not the 50% growth that they did. They did 1.3 million in 2022, but they're still growing significantly. And so they had to do price cuts in order to get there, but we're still at this point. And so I'm not, it's not like the rug's being pulled under Tesla, or that all of a sudden they're going to lose even more sales in the upcoming. I think at the end of the day, unless there's a massive, recession that happens, which right now nobody's forecasting that's going to happen. So I'm just saying that, this is fine. We can, where we are at. And that's what we've been at for the last 6 months. And yet things are progressing with the company, and things are still being sold, and things are, things are looking really good for Tesla still. So.
Yeah, no, it's a positive story. That's why they call it the dismal science, Herbert. Macro, it's the dismal science. I've read a book called The Dismal Science, and it's all there.
Okay. All right, let's move on to, I guess, the milestones that Tesla has been hitting out of the park. And so this week, they announced the 5 millionth car made. It happened to be the Model 3 Highland, or the Model 3 Plus, whatever they're calling this. And it's in Giga Shanghai. That was where this happened. And so they took a photo. And so yet another milestone. And people are pointing out how quickly it's grown, right? How quickly it grew from 1 million to 3 million to 4 million to now 5 million. And then the other thing they announced was the 50,000th Tesla supercharger was installed. And there's our friend Larry Goldberg, drove there right away, and he was able to take a photo of him immediately right afterwards. So, I mean, what do you guys think about these milestones? I mean, how important are they? Are they kind of indicative of some growth that you guys were expecting, or is it just part and parcel of what y'all thought?
I'll just say one thing. I think you have to look at it all in context. You've got rates rising faster than they have in 4 decades, really globally too. Rates up China, rates going up, and Tesla is growing their unit velocity, their output in the face of this. And I think that's the amazing thing. And I think people forget to take those two sides of the equation and combine them together. You've got different things going on with the rest of legacy auto. They were undersupplied for almost 3 years because they couldn't figure out how to get silicon back in their factories after they told all their suppliers to stop these old fabs. They couldn't figure out how to get them restarted again in time, and they undersupplied the market. So they have a different dynamic that's going on with legacy, which I think is actually unwinding now. And I think for Tesla, though, they've been supplying the market, and they've been growing in the face of all these interest rate hikes. About 80% of people go for financing to purchase their car. More than 80% of people, and I think we're at an all-time decade high rate of loan rejections that are happening. So you have a lot. It's about 14% of loans being rejected. So you have all these dynamics that are coming together, but they're still growing. I think that, to me, is the key takeaway of this, in this milestone particularly.
Can I show you guys a chart? Look at this chart, guys. This is the electric vehicles growing to 3 million in US. Look at this. Look at this. This is Q1 2023, Christian. Okay? Q1 2022. Wow. And it just exponential growth despite what we've been saying, the economy and the macro and the interest rates, the growth of EVs. So Jeff and I have covered this in multiple shows, that during a macro environment with a massive recession, it can fall from 16, 18 million per year of new cars sold down to 12 to 13 million. But the electric vehicles may not fall like that. In fact, they keep growing because it's the gas cars that are falling. This is the same thing that happened in 2008, where the hybrids were the ones that continued to grow while the gas cars fell when these hybrids were introduced at that time. So, it's anyways, Tesla's hitting these milestones.
100%. Okay. I just
it's a clinic on
hit my
secular
head,
growth.
and then we can go to, let's go to, but here's a perfect thing to what you talked about earlier, Herbert, the stock and the business. So the supercharger, amazing. The growth, right, from the beginning to now, amazing. Right, these things are incredible, but that's the business where they're at. But that's probably a lot of that is reflected in the stock, right? When you go to $1 trillion valuation, It accepted, okay, yes, they got the supercharger network. Oh, yes, they're growing vehicles and they're going to be the dominant vehicle maker. So now, so that is amazing for the business. But now, if you want to get that next leg of the stock, something has to occur that the market doesn't know. The market knows that they're the leader in EVs. The market knows that they're the leader in the infrastructure, right? We just got a little bump because all the people are going to. So that is a known quantity. So for the stock to go, we need the other things to happen. It doesn't mean it can't go up incrementally just on the EV business, but if you want to see major growth, that's where we need these other things to happen. So that the business is amazing. No one's even close to Tesla on the EVs. Now we need, we're FSD, but the market hasn't rewarded them yet. That's the next step, and Elon's working on it. And I think in the next year, Larry Ellison, that was amazing. What Larry Ellison said, I tweeted it out. I didn't think it was going to go anywhere. I think somebody put it out, and I just quote tweeted it, and it just went viral. He said, in the next year, you'll get robo-taxis. So we could have a little chat about that. That was super exciting. I was like, whoa, that's a big statement by Larry Ellison. Yeah.
You just beat me to my point. That's exactly what I was about to
Xander.
say is you're looking for something. How about that?
Yeah, but also, okay, I do want to just push back a little bit. Like, so you're saying what you said sounds right, which is the market already knows. And so it's kind of like, the prices. But I want to push back a little bit because the market, when the price of the stock was, remember, at $1,243, that was, divided by 3, right? That's $400 plus dollars.
1.2 trillion valuation.
Okay.
Yeah.
It was at that point, and it certainly was pricing in the margin expansion that we were expecting to happen. And that part did not happen. There was a macro that happened. There was price cuts that happened, and that suppressed that growth. But to what extent is the macro reduction and the price reduction bring it down to $100? From $400 to $100. Well, no, right? It's not because of that.
Was too much. That was too much.
There was way too much.
Right.
So now where we're at, you might say we're just about the right place, and I still don't think we are. And because if you take into consideration the macro and the reduction in margin compression because of the price cuts and all that, I just don't think it's worthy of the 400 to 300. And the 400 probably was certainly exuberance. I give you that.
But Herbert,
anyways,
Herbert, it comes down to the math, right? If the forward PE is what it is, and earnings are what they are, the market's not believing that FSD is coming. Look at what Gary Black says. So I get that. Is it mispriced, right? According to the market, which is never wrong. According to the market,
it is always wrong. It's always wrong.
That's the opportunity.
Wrong, but at the moment, it's never wrong.
You say it's never wrong. I say it's always wrong. Yeah.
Well, we're talking past each other. I think what you're saying is, they could be wrong. What I'm saying is the price is the price, though. It closed. The market's never wrong. And that's an old saying. And Xander's right.
Buyers and sellers.
The market's no wrong.
Yeah.
Right.
I guess what I'm just saying, I'm comparing it to where it was a couple of years ago. And in fact, if anything, right, all of these other opportunities are that much closer for it to truly happening versus just wishful thinking. But also think
to be fair, they have to happen. Like the market, we're not in a market. I think so. Here's where I would agree with you, Herbert. If we were back to like 0% interest rates and everything was going on the way it is, I believe Tesla would be double or triple this. Yeah. But since liquidity is being sucked out and things are tighter, I don't think stocks are going to get bid up on the promise of something. They want a little bit of evidence in the numbers, like this is coming. It doesn't mean the whole thing has to play out, but they just need like some type of a breadcrumb to say, look, our financials just hit. Look what's about to happen for the next 5 years. It's already starting. Then I think you'll get it. But I don't think we've hit that tipping point where the financials have shown what to be coming. Yeah.
So I agree with that. So let me ask this question then, right? So we know that there was an AI boom, and many companies got their stock rising because they're excited about it. We know that NVIDIA, rightly so, got the stock right because they have cash. They're actually showing real revenue, real earnings growth, and so forth, right? Yeah. But to what extent could you get a bump in the stock if people start looking at Tesla as an AI company, despite them not yet selling anything? There are many other companies that got that bump as well. Is that something you're going to discount, say, no, that can't happen until they actually have real sales? That won't it won't matter. I mean, like OpenAI, they have massive valuation when they don't really have a lot of sales. I mean, it's a promise of what can happen, right?
I can add it there a bit.
Yeah.
I think
Yeah.
you're going to see it this quarter. I think they added the turn by turn on city streets into the FSD package. I think they lowered the FSD package with enough time for people to either do FSD transfer or to add that package to an S or an X primarily, but also to the 3s and Ys that they're selling. And I think you're going to see a couple $100 million to going to the ledger for actually taking credit for the navigator, the turn by turn on city streets being added in versus a coming soon feature. So I think you're going to start seeing it. I also think you're going to start seeing more and more energy growth. So I think there's a couple of surprises that Tesla can start now leaning on from a quarterly financials perspective that they haven't been able to do before. Before at this point, they're just living and dying by the auto business. But I think you're going to start seeing those green shoots of either if it's FSD revenue starting to grow again, nothing like what it'll be with a robotaxi network, but you're going to start seeing meaningful dollars coming to the bottom line. I also think you're going to start seeing more and more of the IRA dollars coming in. So I think there are a number of areas where you're going to start seeing some improvement to the bottom line.
I
Yeah,
got a question
I
for you
love that.
guys. How far ahead? So would you invest before the actual money comes in, the earnings and the revenue? Okay, so let's say if I told you guys, I know for a fact that in 2 years, this new product will actually already make sales, and you can give a probability of how likely that is. Would you invest now? Would you wait
Yeah.
until a year? Would you wait until 6 months until you have, how far ahead? Because if you wait until it actually does, they actually announce it and
too
they
late.
actually sell it, you're too late, right? Is it something 2 years? Is it 1 year? Is it 5 years? What do you guys think?
Depends how much
I think
alpha
2
you're trying to
years.
claw.
Yeah, I
What's
think
that?
2 years
Yeah.
is a good. Go ahead. I was just gonna say,
Jeff?
I think 2 years is a good. Go ahead, Jeff.
Yeah, Jeff.
I was just going to say it depends how much alpha you're trying to get out of it. I mean, it's all risk. It's the further out you are, the greater the risk is, the greater the uncertainty. But it could also be the greater the reward. So it's all this risk tolerance and how much alpha you're going after. And everybody's got a different situation. So there really isn't one answer to your question, Herbert, to be honest with you. But it's more of
Yeah,
a sliding scale based on your risk tolerance and based on, you know, how much alpha you want to get out of a particular name.
Mhm. I'm just trying to counter the people, both Xander and Christian was just saying, well, the PE ratios, what the forward PE is going to be looking like the earnings rate. You're absolutely correct. Obviously, that matters, but then you also need to tie in some of the bets that you're planning in place ahead of the other investors are, and then that's what I'm
Right.
asking you. Like, if FSD, the alpha there is massive, right? If it comes true and they start making sales, once they announce that it's actually real and it starts to go on, then we're not just talking a slow 20% growth. We're talking a doubling of 5x, a 10x maybe. And so you want to get ahead of it even earlier. But it's a massive bet. It may not happen in 2 years. It might take 5 years.
I think that's a perfect discussion with stock price, and then Xander, you can go real fast. Stock price and business, right? Like I when we were talking, I said I think Tesla got a little AI bump. I know you guys disagree, but just hear me out. Google got a little bit of bump, but wasn't an explosion. Nvidia was the big one, the big winner in the AI boom. Yes, Amazon a little bit, Google a little bit, Tesla a little bit. I think they all benefit. You had Dan Ives get on there, start talking about AI. Jonas did his old dojo. We've given all that back now. So, I agree. Long term, you would invest now. If you believe anything's going to happen next 3 to 5 years, yeah, start dollar cost averaging it now. What I would say is be careful though. Like, don't maybe go in all in now because the market has a funny way of making you look like a real idiot, right? Because if something happens, you have a liquidity issue, and Tesla stock goes down a lot, you're going to wish you had some capital to buy at those cheaper shares, right? Then rather than waiting all this time to get back, you're going to feel like, oh, I'm missing an opportunity. So I think when you deal with individual stock, just for the audit, you want to be prudent in what you're doing because it's not like you're buying an index. Even though an index can move pretty much, a stock can move way more than an index. So again, this is just me personally. This is not financial advice. Everyone's free to do what they want. But I do think that we did get a bit of a bump, and I do think Tesla is seen as a little bit like an AI company now, they haven't got full credit, but I think they got some credit, and that's why you've seen a little bit of the bump coming up. But I think it's a very small bit that they got credit for. But you do see some people talking about it now. What do you think, Xander?
Well, I think it opened the door to the conversation. I look at, is there more compression coming to earnings? So if I don't see earnings, severely dropping like what we're going through now, they're producing more cars, they're selling more cars, right? It took 6 months to sell 1 million vehicles, or produce a million vehicles. So I think that when I make jokes in the beginning about they're doing everything right, they're continuing to grow. Their product offerings continue to grow. So if you're starting to have the conversation and people, the word starts spreading, analysts start talking, now is there a big downside coming? You'll never time the market perfectly. So I just look at, is this a good level? What, how expensive is it? If you look at their earnings potential on FSD and on all the things we know Tesla can do, I just, I'm happy at this level, but I think like this short term looking at the stock, you want to be prepared for it, but like. Seriously, does it matter if you get it for $20 more, $20 less? To say that AI got sucked out of it, back to the price level. But again, historically speaking, the last 2 weeks are what they are. So I wanted to warn people about that, because it was an expectation for what the market's going to do. But long term, you'll I believe, and as Christian said, not financial advice, I think that it's going to double within 2 years.
Yeah, 100%. If you believe in FSD and you believe in bot, these are dirt cheap prices. Like, if these things are going to happen and you believe they will happen and they actually happen, you're getting a steal. Absolutely. We know that. Yeah. But we're also we're talking about, so here's a good question for everyone. This will be a good tell. At the end of the month, we're going to get a P&D report, right? And I know Q4 that they look ahead, but I think this will be good what the market's thinking at the moment. Now, they could be wrong, but just in their moment, the fanatical market, I think the street's still at 460 something. I don't know if they're going to beat that or come under it, but this is a good question for everyone. What if they came in at 440? I'm just making up a number. Do you think Tesla stock will get penalized, or do you think Wall Street will say, we knew about it's going to be 20 light, and do you think they're an AI company, so we're not really going to hit the stock too? I'm just curious what everyone would think would happen on that scenario.
I'll answer first. I think it's gonna whatever has happened for every single quarter is gonna happen again. Even when they hit it, it's gonna fall the first 3 days, and then it's gonna go back up afterwards. It doesn't matter. It's just always going to fall no matter what, and then it'll rise within a week.
Okay. Xander, I'm curious to get, and Jeff, if they miss by 20, both of you though, I would love it. If they miss by 20 on the units, do you think the stock gets penalized, or do you get the expectations Q4 is going to be better and they're an AI company? I'm just being, simple with it.
Yep.
What do you think, Xander?
Age before beauty. Go ahead, Jeff.
Go, Jeff. What do you think, Jeff, about that?
I don't know if I want to talk now. Here's the thing. It depends how they write this report, and how they, going back to our comment on communications, if they put the report out and they don't say anything, and it's 20,000 below consensus, it's going to get hit. If they put out the report and they say we're still aligned with 1.8 million for the year, I think people are going to look past it and say, we told you. They told us they were going to be doing these factory upgrades or doing these product transitions. I think those two together, those are very difficult to do and just maintain all your volumes. So I think they ripped the Band-Aid off, and they did it again in this Deutsche Bank report this month. And as long as they guide for the 1.8, I think they're fine. If they bring their guidance below the 1.8, then it's going to sell off.
I think the options market needs to be looked at. If you're not into options, at least learn about like open interest and look at what they're up to, because to answer your question, it really depends what happens on the run up to the P&D report. So if the market, which I that's why, you know, me personally, I think next week, the tail end of the week, that we're gonna have a push up, because we are lower than what we got credit for with the AI. So if the sentiment is that you're you're going to have a lot of units, more surprise from what you see out there with those reports on what they're doing. So I think that you could have a sell-off if you're 20 lighter than what the market expects.
Okay. Yeah, let's not spend too much time on, right, what's going to happen after the quarter sell-off buy-off, right? It's if there's some structural
I don't think
thing
it matters.
that is, as long as there's if there's a structural thing, which is, demand has fallen, nobody wants electric vehicles anymore, and the numbers are showing that, Tesla's in trouble because there's a competitor, it should sell off. If it's because they didn't hit a number that we thought it was, and it's not because of demand, but because of production slowdowns in the factories, it's built in. People will see right through that and move forward. Okay, so let's talk about the union strike. Let's not spend too much time on it, unless you guys have new news to share with that. And let's talk about Cybertruck. I guess it's really coming soon. I mean, maybe it isn't. What do you guys think? So let's talk union strike first. Do you want to go, Jeff, with any kind of new news you might have heard?
Yeah, just there's a little bit of a chain reaction happening, and there's layoffs. So the big three are starting to lay off. They're starting to lay off workers, which is really what will really start, I think, to scare people that are striking in many respects. And there's this chain reaction of sites that feed other sites, and if the feeder site goes down, or the receiving site goes down, the feeder site doesn't need to be up. So that's where you're seeing they shut down a GM plant in Kansas that was feeding Wentzville in Missouri. So that's happening now. The UAW president said, basically Friday, I'm expecting a new round of proposals from the big three. Otherwise, we're going to escalate, meaning more sites going down from a strike perspective. So the way the UAW is approaching the strike is they're going after high value product lines, and they're doing it in a way where they take workers offline. They minimize the amount of strike funds that they need out of the UAW coffers, but they kind of have maximum pain. Everybody thought like everybody was going to walk out at once, and that would have costed the UAW a tremendous amount of money. But what they've done is they focused on these high value car product lines, and they've taken workers out there. So it sounds like they're going to escalate. I think they're far apart. And remember, this isn't just a wage thing of like 35% or 40% versus 21%. There are things related to pension. There's things related to retention of particular job types, job tiers. There are a lot of things that are going on here. And the final thing I'll say on this is I do think this UAW president is going to use this opportunity. He's now on a national stage, and I do think he'll use this opportunity to try to expand membership, into his union. So, union membership has dropped off over a number of years, but I do think he'll use this global stage, this national stage, as an opportunity to go after a non-union shop or many.
Yeah. Now, Jeff said it perfect. We did a couple spaces on this. I'm UAW talked out. So I agree with everything Jeff said. I'll just say I think it's going to be a messy, and I think it's going to be a little bit elongated, but we'll see. But yeah, I agree with Jeff.
How does it help or hurt Tesla with shutdowns, plant shutdowns?
I think in the near term, I mean, I don't think it has a tremendous. So different product lines at these companies have different inventory levels. So I do think that they're going to start running into stockouts at some point soon if this goes on for an extended period of time. But I think for now, I don't think they're going to have any. I think they were in decent shape from an inventory perspective. Again, not all product lines are created equal. Tesla, I think the two natural areas that people are looking at is one is, can they, if this is an extended strike, can they go in and have more availability of product at certain tiers and sell product? maybe. But the other thing is that people are looking at is, will they go in and organize, at a particular Tesla plan and try to get, one win after another, and then go after Tesla labor in this way? I think those are the areas that are being most watched. But I think what Tesla will hopefully rightfully publicize is their total compensation package versus just these one-dimensional conversations of comparing wages in different states. Their total comp is superior, and it's a superior opportunity for line workers to really have a transformational change in their lives by working at Tesla financially.
Okay, let's move forward. They're really, really far apart. So I think what we're predicting is typically when these strikes happen, goes on for a lot longer than a week. And right now, we're hitting the first week. Okay, Cybertruck. I was just looking at my X. This is being recorded the night before, and there's some new news here. I'm sorry, let me just go and pick this up about Giga Texas hiring more information. So why don't you guys talk about the Cybertruck, and let me look up the news here.
Yeah,
it's coming soon, right?
I'll just say,
what's your expectation? Yeah.
No, I'm different on this than others. I don't believe they're in production. They may have. If they did, they've transitioned in the last week or so. But I mean, the site's down, and I believe when that site resumes, and when Austin reopens, I believe in some short period of time or duration, they will enter production. But there are people on Twitter and Spaces that believe that Tesla's been in production on Cybertruck since August, and I think that's just not the case. In fact, I'm almost positive that that's not the case. And so what we really need to understand is, and they're not going to tell us this, quite frankly, they're just going to tell us by setting the date for the event and setting the date for deliveries. But, have they encountered a new issue in testing? Are they having dimensional issues with the stainless steel? Like, these are the most natural things that come to mind. Is there an issue with 4680s and 4680 supply? Again, I'm not trying to be all doom and gloom. I think they're at these final stages. That's why you're seeing more and more vehicles out in the road. But just to close, I don't believe they're in production. There's no way you would start production and then have an extended multi-week shutdown just a week or two. Nobody does that. Okay. And again, production candidate is not production. Production candidate is as you are progressing towards, going into ramp. Once you exit production candidate, then you're doing mass production vehicles for consumers. So I think they're in the very early stages. I think once they come out of this shutdown, they'll be very close, I believe, to production. We have no idea what the rate is going to be, but I believe Tesla, when they say that, they're starting at some point in Q4 and they'll be delivering at some point in Q4. I think that's the only thing you can take away at this point.
Yeah, I'll just say Cybertruck's a great product. I think I'm on the record saying that this is a complicated, first time they're trying to do this. There's going to be a lot of issues. I'm not an expert on the topic. Jeff knows way more about this than I do. But if you just take some breadcrumbs and, Elon talked about a Q3 event, it doesn't look like we're going to have a Q3 event. So it doesn't take a genius to say maybe there's a little bit of a delay or a little bit of hiccup somewhere along the line here. We also had Elon possibly, I don't know if it was a tweet or something. I'm just saying, talking about he wanted certain things a certain way, and that could be causing a little bit of a delay. So obviously, there's a little bit of a hiccup here. Again, medium to long term, it's not going to be an issue. Short term, there could be things that they're working out. But I agree with Jeff. I think in Q4, we'll get some cars delivered. And I think in 24, hopefully we could start ramping it up. And I think once the product's out, it's going to be amazing. It's a walking billboard. It's has demand through the roof. A couple million pre-orders. It's when these things are on the street, it's going to create a major buzz. So it's all positive. I just think getting there is going to be a little bit of a trial.
One more quick thing. Believe Elon with what he says, and I think there's a good thing. I think there's a challenging piece of this, and there's a really good piece of this. The two things that have stuck with me is one is he's reiterated multiple times, this is a very difficult product to build. You should listen to him when he says that. The other thing he said is this is the best product that Tesla's ever made.
Mhm.
And I think you should listen to that as well, because I believe that they've nailed some really critical specs on the truck product category. And I think, by the way, I think the product transcends multiple categories, but I think they've nailed some specifications that are going to blow people away. I think they're going to blow people away when they actually have this delivery event. I think it's going to stun people. So you take those two things in context of like really difficult to build, which means maybe a bit of a slower start, but oh my God, this may be the best product that Tesla's ever made, coming from Elon, who's seen every product they made. I think that's two critical takeaways.
Larry Ellison just said as well, right? Didn't he just say that there's some things about this Cybertruck that's going to blow people away? Because of that, it's going to take a lot longer to scale. Just want to share this news from Sawyer saying that Tesla has revealed that once Cybertruck production is ramped up at Giga Texas, they're going to have 60,000 employees. They have 20,000 right now. So this is from Jason Shawhan, from Tesla's Director of Manufacturing at Giga Texas. So at 2022, they had 12,300 employees. So they grew from 12,300 to 20,000. They're going to go to 60,000. Didn't have enough parking for the workers. They're now building parking garages. Okay, good. This is, I mean, that just shows that, what does that tell you? That tells you that they're planning to hire employees because the Cybertruck, they're expecting it to be a massive sales effort, and it might take longer than we expect. I mean, they don't put a time frame of when they're going to be 60,000. It could be many years from now, but that's what they're planning. So it's going to be very, very successful.
Can we say one thing on that really quick, just so people understand the magnitude? That that number was at 12,000 at the end of the year, and now it's up around 20,000. I mean, you've grown your workforce 70% when you're only 70% through the year. I used to tell you, from a manufacturing perspective, that is really difficult to do. I mean, I can't believe they've actually grown that much. Again, you have to look at it as a percent off the base, not just, oh, it's 7,000 people. That is huge growth in a manufacturing footprint off the base. That's very difficult to do. And the fact that they think it's going to be that size, that site's going to be that size, is pretty exciting. It's going to be multiple product lines. I don't think it's just dedicated to Cybertruck, but that's pretty. Those are pretty. That 12K to 20K, that's impressive.
20 to 60. So Xander, you bought a semi. You bought multiple Cybertrucks. What you thinking?
I'm excited by
with the house for all these vehicles. I'm sure of it.
Yeah.
Maybe not. Well, maybe not.
We'll park them in the yard. Seeing what the Cybertruck can do on the track was really cool. Just see, we have a Model X, and feeling the acceleration on that thing, and it's like 6,000 pounds. It's so heavy, and it's like a dog meowing. You don't expect it to do that. So I think when the truck buyers, the good old American truck buyers experience it, it'll be difficult to hate on it when it out accelerates, out maneuvers, and it has all the features that people that like trucks. It's a really cool product. I'm very much looking forward to it, and I believe that they'll start slowly, but I think that labor number is, as Jeff said, very, very impressive. And the fact that they already have that much of a workforce, it shows you that they're ready to run. So it'll be tricky in the beginning, but they'll iron it out very quickly, and we'll be off to the races.
The other thing that he did say, Elon, not just that it's going to be a very difficult product to make, it's going to be the best product to make, but he also said that this is manufacturing first, right? That they designed the truck. The reason why it looks the way it does is because they thought about how to really scale this. As when it's manufactured, it's going to be so fast, and how to scale it. So yeah, I mean, this is I'm getting excited just now thinking about this. So maybe in a couple of years, we're just going to see this thing just take off. I'm very, very excited.
Okay, tying in the factory real quick. So it's down right now for line upgrades. And why did they stop making the Y out of there? Can someone answer that for me?
The speculation is that their whatever bottleneck process is in the 4680 is they're allocating that to the Cybercell, which is 4680 based. That's the speculation. None of us know for certain, but that is the speculation. And they're taking the factory down for upgrades. Factories don't run. This is the thing. Factories don't run 52 weeks a year. I'll just repeat this over and over. When you design and you capitalize a factory, the denominator you should be using and what planners actually use is somewhere in the 46 to 49 week range for the denominator for utilization. And that 3 to 6 weeks is used for holidays, for line upgrades, for maintenance problems, by the way, for inbound part issues may take down a line. And you need that slop in the system. If you're running at 52 weeks, your probability or propensity to break something that's actually going to take you down longer enters the equation.
I just
Jeff
want to
Herbert
say
was
you're
taking notes there. He had a little gleam in his eye. Herbert was
Yeah.
like, I'm
No,
going to use these words. He had Jeff
I was going
envy
to use
going
his
on.
words, but also because I know that I've been obviously having lots of conversations with Jeff, and because he's been saying this quite a bit, and people don't hear him, and I'm like, I gotcha.
You got a
gotta
new
keep
word,
saying it.
denominator.
he's a Tesla community treasure. It's
We love
incredible.
Jeff.
Just who else can tell us?
I fall asleep to Jeff's voice at night. You know, I'm not going to tell a lie. I put him on, and I
But it's not. But it's not talking about
no,
Tesla.
in a good way. In a good way. It's a soothing voice. Not. He's got great input.
I fall asleep whenever he says, "I'm going to invest in Celsius. It's a beverage."
So I wanted to ask.
I gave my input on that today.
I know.
And I've been right on it all year. Go ahead.
I know.
So I wanted to ask, tying back to our stock conversation. So how much of this next gen vehicle is priced into the stock?
None.
Zero. Like zero.
How could you price
Jeff.
it in? It's not. It's a gleam in someone's eye.
I think it's debatable. I think people are, if you're using a 10-year DCF, I think people are including the units.
Yeah.
I think it's debatable. I think part of it's in there.
The stock
no one
market.
knows, but
So
no one knows.
okay, so if that's true, Jeff and Christian, earlier didn't you both say to me that it's already, the market is so priced it in, and they already priced in the compression margin? Well, now you just talked about a Gen 3 platform that's going to be 10 years from now. That's already priced in. Then why are we still at 250?
No, I disagree with you, Herbert. I agree with you. I said nothing was priced in.
No, I know, but I'm going back to your comment earlier that the price 250 is correct because it's margin compression is equivalent to the 250.
No, I said the story of the growth of the electric vehicles, the supercharger network was priced in, and that's that part of it's priced in. That maybe it's not priced in. Maybe I don't know. Something's priced in. You wouldn't be an $800 billion company if nothing's priced in.
I mean, let's talk about Gary Black says his target to 2030 is 10 million cars. And so does that mean that he's priced in?
I'm not doing that. I'm asking you though. Something has to. The company's worth $800 billion. It was something's priced in. What is priced in your mind, Herbert? What is priced in?
Well, I see. So first of all, I look at Tesla not as a stable, mature company. Because if you look at it as an auto company that is stable and mature, then you go and say, tell me the earnings per share and let me do a multiple on that. What I look at it is a startup, right? Certainly it has a significant mature business, which is the auto, but it has startup businesses and multiple of them, energy, bots, and robotaxi, and the third gen car is a startup business. It hasn't happened yet, right? And so whenever you look at startup businesses, you don't look at the earnings that I'm going to calculate for next year, and then therefore the price is right. I am now adding in with the alpha and some potential risk that might happen, and that's why I'm investing now.
So I agree with you. I think what you said was great and spot on, but you're still not answering the question very politely. What do you think is priced in?
Okay, gotcha. So for 250, I'm with Alexandra. If she was here, she would tell you that the price should.
What do you think the market is giving Tesla credit for? Yeah.
Okay, so I think that 800 billion is absolutely fair for the fact that they've absolutely won the auto market, right? There's no ifs, ands, or buts about this. You got the competitors. As soon as the competitors started partnering with Tesla for the superchargers, it became super clear at that point that there are no competitors, that there really are second out, that this is the leader. many people thought at one point that Tesla was leading, and then but they'll be eclipsed. I think at this point they know that Tesla will continue to lead. So that part is priced in, and that's it. I'm telling you right now, that's it. They don't price in energy. They've not done any robotaxi. You and I just discussed AI. I think that AI, the company should be priced in some more AI, and it will, because they're starting to communicate this as AI. And more. I was also going to mention a little bit earlier that I've started noticing that institutional investors are starting to pile in now. We know that they have been piling in, but now we're seeing the reports coming out, talking about them as an AI company, talking about as an energy company. And so these things, the narrative is changing from that perspective, and that's not priced in yet. So even though they're investing, the general market hasn't said, oh, this company is an AI company, it's an energy company, it's a a bot company, it's got the 3rd gen car. None of that's priced in, except for the fact that they're leader in EVs.
I agree with you. So basically,
if you're the leader in EVs,
is priced in.
You're worth 800 billion. You're worth at the 250, just that alone. And so what my complaint is, it should be at 300 right now because of all these things we talked about that no one is giving credit. And you know why they're not? You just said it at the beginning. Because we're not in this liquid market. We're not where we were at 2012, where there's cash galore, interest rates pot down. And then what I'm saying is that, okay, so let's stay with the 250. I think it should be worth 300 or higher. Alexandra will say it's worth 400.
250 and 300.
But just
it's not like it's a magic. It's not that far apart.
No, right. Because of
150 billion.
But because of,
but I mean, it's not like a massive disconnect. Yeah.
No, there's no massive disconnect. I'm not saying that it's worth $400 at today, but that's because of the macro. And so I think that the macro will turn. And so we were just saying earlier, right? It's going to stay flat. It's going to pause. But even at the level it is, with the interest rate staying where it is at, the company will still hit 1.8 million. They're still going to hit 2.5, 3 million next year. They're still going to keep growing, and they're still going to sell all that despite the current interest rate.
I don't know about 3 million. I don't know about 3 million. 3 million.
Oh, yes, for 3.
You think we're 3 million next year? I don't think we're going to do that.
Every car that Tesla makes will be sold regardless of the macro or the rate. They will cut prices in order to get that to happen, but they will sell every car that they make.
I agree they'll sell everything they make, but just a friendly discussion, 1.8 to 3, that's a massive jump with interest rates probably similar to where they are now.
50% growth, right? So I'm going to say 2.5. I'm not saying 3. I'm not going to say
I'm in there.
2/3 growth.
Yeah.
If they hit 1.8, well, if they hit 2, then 50% growth is close to 3, right?
2, 3, 2, 4. I can see that.
So you.
I just heard you say 3 million. That hit my note. I don't think 3 million next year.
Yeah.
What do you say, Xander?
Jeff? I don't think 3 million. No, I think that's a little too aggressive.
No, I think 2.3 to 2.5 is makes sense. I think the Model 3 Plus is going to be a runaway hit, both I think for units and for margins for Tesla. And I think they're going to continue to be able to extract COGS out of the Model Y. And the way they're going to do that is they're still going to get money out of suppliers, but the most that they're going to get is out of Austin. I think that is the big opportunity for them to take further cost out, both on the 4680 side and on the Austin assembly side. I think that's where they're going to get. I think there's a lot of money on Model Y that's left on the table because of inefficiencies in Austin. But yeah, I think 2.3 to 2.5 next year. And like I said, I don't think everything's priced in, but I don't think everything is necessarily out either at an $800 billion company.
Yeah, I agree with that, and I think that it all comes down to that trajectory of earnings. If that plateaus and starts coming back up, then you'll have the stock appreciation. But Wall Street's sitting on the sidelines on the company. Not all of it, obviously, but there's a lot of people that aren't getting in, or portfolio managers. But at 800 billion, the potential for robotaxis or software as a service, that's what's being priced in at 800 billion. But is it its final form? Absolutely not, right? Because if you're a company like Apple or Amazon, right, then can this become a $3 trillion company? Can it become a 5 trillion or 10 like Elon's talking about in the book? So I I brought that question up because I think that there's so much talk about the car business, but the the potential for what Tesla will become, that is not completely priced in. A little bit.
Let me tell you where I think the market is off. Uh, I think it's starting to wake up, but I think I always look for these disconnects or opportunities, and where they're off is they're giving too much credit to Tesla competitors, and they're actually further behind than they're even being advertised. I think if we actually were able to walk into those operations and actually sit in a design review or go to the factories and see and have them and be able to ask the right questions, and we've been actually prognosticating this if you've watched this show and other people in the Tesla community for the last year, that the competition's actually further behind than what they're being given credit for. And they're going out to markets, they're going out to capital markets and saying EV this, EV that, this model, that model, PowerPoint show. Let's see a $340,000 Celestiq. Let's see a $130,000 Cadillac. And then they're not putting the supply behind it. They're not putting the capital behind it. They're not building the supercharger networks. So I actually think they're further behind. And they've had these conversations, Jim Farley, Mary Barr, of like, hey, we're not going to build a car under $40,000 profitable this decade. Well, holy shit. That's like a big thing to say if you're one of the big three auto manufacturers in the world. And then you've got Toyota talking about stuff they're going to do 2026 to 2028, and they haven't hit the stuff that they said 6 to 8 years ago. So I think that the dislocation in the market is there is still a secular growth. That chart that Herbert showed, that is going to continue to blast through auto, whether auto goes down, 5 or 10% over the next year for whatever reason, rates, whatever. EVs going to continue growing. Tesla has the supply. They're building products that people want. They've got the 97% NPS, and they're expanding their product line right now. So I think where the competition is, I think they're actually further behind than the market's giving them credit for in just building EVs. And I think they're further behind than the market gives them credit for in FSD. And I think if you put those two things together, I think there's going to be a rude awakening coming.
So I agree with you, Jeff. I'll push back on one thing on you and one push on Xander. I think the 800 billion, there is no software as a service in there. I think that, like Herbert, it's just basically the cars. And to Jeff's point, what you said there was great. The only thing I would push back a little bit with the credit, I agree there's no competition. I've been talking about that too. In North America, there is no competition. They're going backwards. But that's why they have the $800 billion valuation, right? Because there is no competition. What I agree with you is that they're not getting enough credit on the FSD piece, even though it's not finished. I believe that technology is so unmatched and there's not anyone close, like we talked about. I believe that is not being priced in at all. I think it's basically just the EV business, the energy business a little bit, and all this other stuff, Tesla bot, it's getting a zero. Now, maybe you could say, well, again, it's not been proven out, so it's already richly valued, and the earnings hasn't come through. But you're right, and Herbert's right, and I think Xander's thinking like this too. As soon as the market gets whiffed, that Tesla bot is actually a product that can be sold, that FSD, either a licensing deal with one of the guys, boom, right. So you need to be in it. So I agree with you. But until that happens, I think right now we are fairly valued, maybe a little, undervalued for the potential. But this is not a market for potential. This is a market for what are you doing for me now? Because liquidity is pretty tight. So that's all I'll say.
Okay. Let's talk about the next topic, which I think you just hinted at, which is partnerships, potential partnerships. So we know that Tesla struck a deal with Ford for the supercharger partnership, and since then, almost every companies one by one they're falling and joining in with the North American supercharger network. Just very recently, Jaguar announced as well. Everybody needs to do that now. Now, there is, we heard Elon say that there is a potential for an early discussions for a partner for FSD. And then as we've been unearthing these discussions that institutional analysts are having with Tesla, they are also repeating that there's a potential for a partnership that's being discussed. So this is a lot of little tiny, smoke, and where sometimes there's smoke, there's maybe fire. What do you guys think? Is there a chance for a partnership? Is it going to be an FSD thing that's announced? Is it something else? What is your feeling? Or is it, it's too early to speculate, so we don't even want to talk about it. Where do you guys stand on this?
Go ahead, Jeff. You were going to talk about this earlier. Go ahead.
Yeah, I think we're in a 3 to 6 month window. Again, not investment advice, but if you look at the lead time to connect as a partnership and then be able to actually ship it in vehicles, these companies are working from a design perspective on their 2025, 2026 models at various different stages, and so for them to be able to actually package that vehicle and do the actual industrial design work. And if they're going to have an autonomous solution, and they know they're nowhere, they're probably in their boardrooms right now looking at like, where are we actually at in terms of like launching something, both from again, does it work, and then do the unit economics actually pay off for us? If they come to that conclusion quick enough, they're going to strike a partnership with Tesla and just listen to what Tesla says. I don't think they're saying, listen to what Elon said. I don't think he's saying it just for his health or just to put words out into the ether. They've actually said that, they said this on the last earnings call. So, I mean, I would take it at face value that they're very close on this.
Yeah, I want to run with Jeff's last point. Don't discount Elon, and I think the market is starting to change. Not the media, but the market. I think the market's starting to understand that Tesla executes, and the predictions that Elon makes, the 2014 500,000 cars in 2020, and all of his future predictions, they'll be late. They're always late. So I agree with Jeff there.
And then what you, Christian?
Yeah. No, I definitely think that the market is starting to change. I think the book, I'm only halfway through, but I think that book, as more people read it and as more top people, listen to that book, I think there's a lot of nuggets about how Elon thinks and what he's going after. And just from a personal, from what I've seen, the grit that man has and the dedication, I think that is coming through. I don't think that was really appreciated by a lot of people other than diehard Tesla people or people that have followed the company for a long time. I don't think they really understand Elon's commitment and how big he thinks and his determination. So I think this book is slowly seeping out, and as big money people listen to it and realize it and what he's already accomplished, I think that will seep through more, and more people will want to get involved with the stock and the story.
Okay, so my point is that if we look back about what actually made the stock skyrocket, one of the things that does is partnerships, right? So when the Hertz partnership happened, that's when we saw the stock go from 350 to over 420. When they announced the Ford partnership for supercharger, we saw a jump as well. And I think that at any time a partnership could be announced that's significant, that could change the narrative very quickly, and then everybody just gets very, very excited, right? So at any moment they can make an announcement. The FSD partnership announcement would solidify that FSD is a real product, and that other companies, not just Tesla's, we know that Elon sometimes says things that even though the product's not available yet, and he's been, people are going, oh yeah, he's just saying it. But if another company actually signs a contract for FSD or a portion of FSD, it changes the game. And if you think about Elon, as you guys were saying, don't discount him, because what does he do really, really well? It's partnerships and relationships with he's making the rounds with every single world leader right now. They're all clamoring to partner with him to build megapack factories and gigafactories and whatever thing. So it's just a matter of time for OEM companies and other companies like, Hilton announced their supercharger thing, and lots of other companies will start falling into place. So it's going to happen.
But how does that make money, right? So you have you have Elon saying, sorry, you were about to switch topics that threw me off.
I'm not about to switch topics. Go finish it off. Well, how's this going to make money?
So the licensing will make money if he licenses
but
every
hold
car.
On.
Yeah.
I got that. So, but how do you integrate FSD? By the way, I have FSD. To say that it's not a real product, it's
Right.
very much real, and the market is not understanding that yet. But how do you integrate FSD into Ford? Right, you need software, you need cameras. Is it just a computer? Is it just control?
This is
Elon's-
probably an hour-long show.
Yeah.
But I would say they would set up a separate partnership team inside of Tesla to work with these companies, and they would be buying a development kit that would include how to design, how to spec out the system, and buying Tesla's computer and buying Tesla's software. So this could be a whole other show, but they're going to make money in the development phase, called non-recurring engineering funds, and then they're going to make a royalty or a license on the usage of the
Software.
system in the marketplace. So it's a big thing. Just two quick comments. I know we're going to wrap up here soon, Herbert. One, this partnership is the end all be all. It's nothing even close compared to the supercharger or the Hertz partnership. This is on a whole other level. And I think that was the key point I was going to make, is like this partnership to me really doesn't compare. The other quick point I was going to make is that Adam Jonas report. I don't think that was a coincidence. He covers multiple partners in the auto industry, and obviously they have very in-depth information. So the fact that he front ran with that report and wanted to be the first, I don't think that was a coincidence. Sandwich that in with what Elon said on earnings about potentially working with a partner. I don't think this is all a coincidence. I think it's imminent.
And I just want to follow with that. That was what I wanted to say. This becomes a Tesla inside moment, and now is that priced in? So I think your point and highlighting that the stock rally happens when there's partnerships is a very good one.
All right. Great show, everybody. We missed Alexandra, but we still held on. Thank you, everybody. Appreciate you guys. We have a new X account called CyberBulls1. Please follow that, and please follow Christian at CValente28. He gives updates daily on the economy
and
entertaining comments, but also about the economy and stock. And then Xander, he keeps close eye on the stock and information on that. And of course, Jeff is the expert for so many things: factory production.
Jeff doesn't need advertising. He doesn't need it. And why isn't it CyberBulls 69 or CyberBulls 420? Why CyberBulls?
I asked you guys, and you. Okay, we can change it
because we're the number one podcast. We're coming after all.
I'm fine with number one. I'm fine with number one. I don't need the 69 or the 420.
Okay, I gotta go. Gotta go, guys. Okay, see you later.
Bye bye, everyone.